Market Shots are short video segments designed to help you develop a trading strategy that you can stick with. Here to help you is the Chief Market Strategist for the Market Guys, A.J. Monty.
Welcome to our next lesson, which is the reverse head and shoulders. Now, hopefully you've had a chance to look at the head and shoulders top and reviewed what the shoulder, the head, and the other shoulder looks like. This is a bottom pattern. It's very reliable, but you have to be careful that the formation completes. A lot of people think that a head and shoulders pattern happens in a series of days. It does not. It actually happens in a series of months with, I would say, a minimum of 3 to 4 months to complete and reverse the pattern. Now, as you can see here also on the chart, I have a 20-period moving average. I'm throwing that on there now so you can see this is a gauge that we use to signal when the leg is shifting, and I'll explain that more as we go along. This V pattern here is a support level, but it's acting, if you flip this over, remember from the head and shoulders top, this V pattern is going to be our shoulder. It goes up, comes back down, and on the way down, notice the increase in volume here. It's important that we see a high volume on the head, which is this area right here. This head pattern forms another support level. Stock starts to go up, comes back down, forms another V bottom or support, and it's important that this area right here, especially as we look at this, you'll see the volume here on this right shoulder is lower than the volume on the head. That's a significant signal that you have to watch out for. And when you put this all together, you have a left shoulder, a head, a right shoulder. Now, this area right here is where we're drawing this area right here, we're drawing what might look like a trend line, but what I'm doing is I'm completing these tops to form the neckline. The neckline is where we're going to be taking action. Once the stock starts moving over this neckline, we look for a break or a rally, and that's where we take our long position. The neckline is also used as an area for setting stops. If you get a breakout over the neckline, you're taking a long position. You're going to put your stop somewhere below that neckline, or maybe even below the moving average if you're using it that way. Now, this is a major reversal pattern. It's very common, it's very reliable, and what I would encourage you to do after you've watched this video is to go out and look for stocks that have formed reversal patterns like this so that you could develop your eye and become more familiar with the head and shoulders bottom. Now, if you're learning more about how to trade these as strategies, I would encourage you to go to the Market Guys page, learn more from our members page. Of course, you have to be a member to join that, but it's very well worth it. We have videos that focus more on the strategies to trade rather than just the concepts as you're seeing here, and we put all of our efforts and concentration into helping our clients become the most profitable traders and investors in the world. So thanks for joining, and we'll talk to you soon.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.